Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video, as we begin dissecting the markets, I think two of the most relevant places to be looking are tech and the transports. So as we begin the analysis by looking at NDX, you can see that through Thursday and Friday we had that sharp flush back down into the 50-day moving average, a better than 1% gap, and then trade higher today, which I've got to think is beneficial for the bulls, but we're not completely out of the woods just yet. I do like looking at the retracement of previous major swing highs to swing lows, and you can see that that took us right back into the 618 retracement, and this is an area that you have to consider for resistance. Of course, we also can't ignore the fact that we are still in a pattern of making higher highs and higher lows, which is not directly, beneficial for this market, but the reason why I think that this is going to be important to focus on is because, of course, if we come back and looking at something like the Qs, well, we know that their primary component is going to be Apple, and of course NASDAQ Qs, same concept. I just have the ETF laid out with the top 10 holdings here, so we can come down and say, okay, as we try to determine what the NASDAQ will do, it makes sense to look to Apple. In that way, we say the NASDAQ has a squeeze, then we come back and take a look at a daily swing chart of Apple, and this chart has been doing an excellent job of holding its post-earnings gap. So we have them move up into 157, 156. I was looking for more of a continuation immediately after the report. As it worked out, it's had a little bit of a pullback, kind of back and forth, but ultimately this range is still intact, and as long as Apple continues to trade above 156, I have to continue to like it to the long side. So that's one place that I'm going to be looking to see if the markets can shape up and continue to progress higher. Then I think there will be a trade in Apple up to 163. Something through a butterfly might be a little bit easier than picking up calls, as for a little bit extended here. But one other market to take that idea and kind of compare notes on is going to be IYT. So in IYT, and taking the same type of concept, depending on which videos you've caught, we've looked at this a lot of different ways. I've been vouching for the support off of the 618 retracement, which has came back to be tested again, and now we're starting to clear the symmetry, which would suggest another place to start looking at more bullish moves. Now IYT, and I needed to refresh that, but that's okay. The main point I wanted to show you was that chart of IYT, and then doing the same thing and by drilling down into its components, and then looking at something like KSU. So I look at it and say, okay, IYT has cleared part of that initial bearish symmetry, it's held support where it needed to, and then you've got a chart like KSU that's holding up well on the weekly, and then we also have a nice daily squeeze. So I think tech and transports will continue to be very important, and if you're looking for exposure to the long side in either of them, I think those will be two good places to look. So I hope you find that helpful, and we'll touch base on these ideas in the next free video.